All information contained in this podcast is general in nature and does not consider your individual circumstances. You should consider the appropriateness of this information with regards to your individual objectives, financial situation, and needs. Welcome to Sharing More Than the Sheets, a podcast to help you and your partner make better financial and lifestyle decisions so that you can both focus on the things that you love. I'm your host, Michael Khouri, financial planner, green thumb, husband, and just dad. This podcast is part of a short series to help and encourage current and potential small business owners to improve and grow. I will be talking to experts in their fields, as well as successful business owners, and we will be discussing what they do and how they do it so well. Many people that are starting up a business or thinking of expanding their business or working on something different normally need some money to do that. Today, I thought I would invite George Massa of Astute Financial, who I personally believe is one of the most, I could probably say, credible people when talking business finance and having to borrow money for a business. George, thank you so much for joining us.
Oh, thanks for having me, Michael.
It's it's normally when I know you've been doing this for a very, very long time, and anytime I talk to you about business finance, I'm always amazed by the amount of not just the knowledge that you have, but even like the amount of not even complexity, but just how it differs to like personal finance. Like if somebody wants to, for example, if somebody wants to apply for a home loan. It's a very different process. It's similar in a lot of ways, but it's also very different to getting finance for a business, to set up a business or to, as I said, buy equipment, etc. Can you sort of maybe explain a little bit just about your experience in the field, and just to touch on, first of all, some of the differences between somebody thinking, hey, I'm going to go get approved for finance to buy a house, compared to, hey, I want to set up a business. I'm going to go talk to the bank about getting some money.
Yeah, definitely. I guess so. I've worked in business banking with a couple of the majors, NAB and CBA, in business banking and supporting business clients from all sorts of different sizes and types of industries to support them with their business requirements as well as their personal. So basically, business finance is funding to support your business's cash or borrowing requirements. This can be working capital or a loan to assist with growth, a purchase, or investing in your business. There are different types of business finance options depending on the purpose of funding. So it's important to have that discussion with your financier or broker. This differs from personal finance, as that is really specifically for individuals and for personal purposes, and that can include a home loan or a personal loan, whether it is an individual looking to buy a car or consolidating some debts. So personal finance is a loan that's not for business purposes.
Yes, okay. But as far as like the application side of things is concerned, and I mean, without getting into too many specifics, of course, because we could probably be here for hours. As far as, when somebody's applying for like a business loan, when someone's applying for a home loan, normally all they need is, some pay slips, some living cost stuff, your other legals, and a few extra little bits and bops here and there, when it comes to personal finances. But with a business, what are the extra things that a bank or a lender normally wants to see or wants to ask? Because when I talk to some people, about borrowing money for, to set up a business that have never really done it before, I hear a lot of confusion, if that makes sense, because, some people have heard they need like a business plan. Some people will hear they need a marketing plan. Some people will hear that they don't need either. What are the extra aspects involved from that side of things?
Yeah. I guess, firstly, each business is different. For a financier to understand the purpose of business finance, they'll ask, what and how do you plan to use the money for your business? The requirements for a new to business compared to an existing business can vary. And that's where I guess a new to business banks will want to see a business plan so they can understand the the work that's been put in by the business, the proposed business owner, that they've done their homework and due diligence into what they're looking to do.
Yeah.
Some of the things that the bank will look at, other than understanding the purpose, is understanding the cash flow cycle as well of the business, to determine how and when the business generates cash to support business operations, growth, debt repayments, and profit generation. Understanding that cash flow cycle will enable strategies on the type of business funding required. So, each business will be different. So the requirements from the bank will be a little bit different in supporting documentation, but generally, some of the items that the banks will want to look at in assessing the eligibility of the business will be looking back at the 5 C's of credit in assessing a business loan, being character, capital, capacity, collateral, and conditions. So I'm happy to go through those if you like. So I guess character, business, that's looking into the business credit history and reputation. The bank will evaluate repayment history, references, and the quality of the product, the reputation, experience, and conduct of the business owner, as well as understanding the management team and the experience there. Capital will relate to the client's contribution to the transaction. So that's one of important factors for anyone to consider prior to getting into a business loan. The bank will want to see skin in the game. Capacity, this relates to the business's ability to service its commitments. So meeting loan repayments, how you're going to do that. The bank will generally consider the group's commitment position, including personal debt. So that's where historical financial information will help support the capacity side of things, and also at times will require cash flow forecast depending on the strategy of the business going forward, especially if they're going into growth phase or diversifying the business. The collateral side of things is the asset used to secure the business loan. This could be real estate, equipment, vehicles, accounts receivable, inventory, or other business assets. The collateral position is essentially the bank's exit strategy should the business be unable to meet its commitments. And last of all, the conditions relates to factors outside of the business owner's control. And this could be economic, such as economic downturn, just as, COVID is impacting a lot of businesses in different ways. Or it could be impacts specific to an industry. So in this case, banks will seek to get to understand the mitigants around any risks to support a business loan.
Yeah. Okay. So really, it's like it's essentially if the business is if a lender or a bank is getting into bed with the business owner, they essentially just want to do their due diligence. They want to make sure that, and I like that you when you mention the C, so like the being able to trust the business owner or with the brand, for example, looking at skin in the game, because it makes a lot of sense. If a business owner is saying to the bank, "Hey, I want $1 million," or I want $20,000 even, if the bank can see that person has something to lose as well, or that they're putting their money where their mouth is and they're betting on themselves as well, then that makes a lot of sense as well, because I guess it makes the bank feel really comfortable, because if somebody's willing to bet on themselves, then the bank would be more comfortable betting on that person as well, or on that business concept. And then you mentioned capacity. So cash flow. And I guess for a business owner, when I think cash flow, I just think of a business owner or somebody that's putting a business plan together, even to look at what's that business actually going to make, when do they expect to be making a profit, etc. Not just for this purpose, but even in general, just to make sure that they can pay themselves a wage and that they can pay the bills, and that they're not setting up an amazing business that's not going to be profitable at all. Because I see that a lot, and you've probably seen it a fair bit as well. where a business is like an amazing business, but cash flow wise, they're just, terrible. These podcasts have been brought to you by Better Financial Planning Australia. To book a free 15-minute phone chat, visit betterfinancialplanning.com.au. Or in the negative.
Right. So understanding those cash flow cycle is so critical. Understanding, how long does it take for a business to collect payments? What is the manufacturing time if they are a manufacturer? How long does it take for goods to be received? What are their supplier terms? That all has a big impact. And on paper, sometimes a business can look profitable, but when there's cash flow gaps and funding, that can have an impact on the overall margins.
Yeah, so it's not just a black and white scenario. There's there seems like there's a lot of, I'm sure there are some quantitative figures. Being a lender, they obviously need to look at figures as well, but it looks like a lot of it is qualitative as well, from a common sense perspective and from a risk appetite point of view as well, I'm guessing, because the bank's going to be more likely to lend money to a business idea that isn't as, you could say, risky compared to one that's, say, very risky, and when, a business owner's not putting anything into the business, and it just makes a lot of sense. And to those listening to this, it's like getting a house. It's like getting a loan for a house, essentially. And a husband and wife employee scenario where they're both employees, they don't have many debts. They're going to be a lot more likely, I'm assuming, to get approved for a home loan compared to somebody where, their cash flow's not really very strong because they're self-employed, only one person's working, there's not much of a plan, expenses are really high, debts are really high, etc. Would you agree with that, George?
Yeah, that's right. And the risk profile has an impact on the risk profile, and the collateral provided has an impact on the overall pricing, which can also have a big impact on the business.
Yeah, that's a good point, actually, because I'm assuming the interest rate, for example, would be a lot higher in a riskier scenario compared to a safer scenario for the bank, we'll say. Yeah, that makes sense. And what are some things that some people would get business finance for? For me, the first thing I think of is just opening up a business, setting one up from scratch.
Yeah, there are so many reasons a business might seek business finance, and you're right. Number one is that the first thing that you think about is the purchase of a business.
Yep.
Also, if the business is outgrowing the existing premises, they might look at expanding and purchasing a commercial property and relocating. Capital expenditure. This could be the purchase of new machinery, equipment. It might assist with efficiencies, vehicles, even furniture and fittings. The expansion of the business is also one that we see all the time. Businesses expanding and needing that funding to support that expansion, and probably the most common one would be working capital. So providing access to funds so that the business can cover its operating expenses, growth, purchase of stock and materials, and being able to manage that cash flow cycle that I was speaking about.
Yeah, okay. And I'm assuming from a common sense perspective, the only reason a business owner would look for finance for their business is if, and this is not even from their point of view, but even from the lender's point of view, is if this cash or this money is going to help produce more profit. Like what you said, whether it's expansion, yes, they're paying an interest rate on this money, but by having these funds, they're able to expand their business, B, to purchase more equipment, or C, working capital. Like, as obvious as that is, I just wanted to make that point as well, that, it's from a business owner's perspective. I've spoken to a few people, for example, that would like to borrow money for their business, but when I ask them why they want to do it, I'm not licensed to give advice on credit, just to point that out. But when I talk to them about the reasons and I refer them to someone like yourself, I find, or sometimes, the conversation sort of just ends up in, I don't really know why I'm doing it. I just thought it would fix everything type of thing. So like, there's no real strategy as to why they're actually borrowing the money. There's just, they think it's going to fix a problem basically. And I don't know if you've seen that before, or can you share any scenarios like that, or even any situations where somebody obtaining some sort of business finance has really helped their business?
Yeah, I guess I've seen situations where,
not to mention names, obviously, but just certain
no,
scenarios.
of course. I've seen scenarios where businesses have needed to invest in new equipment and they've utilized their cash flow to do that. And although that cash flow was available at the time and it seemed like the simplest solution, there's a flow-on effect on the cash flow if depending on their situation. So I guess understanding the purpose and ensuring that the right strategy is in place for of any funding or capital expenditure requirements is important to ensure that the business is able to continue to operate in the same way that it has to date, and it won't be negatively impacted by one-off purchases or changes to the business.
So essentially, the message I'm getting here is that it's about having the right funding strategy and talking to the right person. And I guess I compare it a lot to financial advice in a way that, as a financial advisor, yes, there's a gazillion strategies that I could recommend somebody, but my job is to work out what's appropriate for that person and their family and what's going to deliver the best possible outcome. No one has a crystal ball, obviously, but if some sort of strategy is better than having no strategy. And that's why I implore anyone that's listening to this to contact someone like George to talk about these things, just because, again, sometimes it could sound like a really good idea, but when you actually talk to somebody that knows the field well, you might find it's not appropriate, or you might find it is, but in a different way than you thought, And George, finally, and just on that note as well, if anybody wanted to contact you, George, or your practice, what would be the best way for them to do that?
Look, I'm always available and open to having a chat with anybody on how I can support their business or individually finance requirements to help them achieve their goals. So by phone, by email, I'm always available to chat over the phone or in person, and would love to help support as many people as possible.
Yeah, and I can vouch. I could vouch for that as well. And what I'll do is I'll put your website in the description of this episode link as well, so that anybody could just click on that and contact you through there as well.
That's fantastic.
And
thank you.
yeah, and I want to thank you for making such a, we'll say, not so exciting topic, at least a little bit interesting, because I know that it's not the most. It's not exactly flavor of the month to be talking about borrowing money from a bank, but, again, I think you've really highlighted some really, really important topics, and points that a lot of people need to consider, when looking at this area. One last thing is I like to finish all my episodes off with a dad joke, which I know you will appreciate so much. And I found a joke about banks, by the way. So why did the skeleton decide not to rob the bank? He didn't have the guts. It's not too bad. There's actually a whole page here. I Googled. There's actually a whole page of dad jokes about banks, and they're actually really funny. I've mentioned a couple here before, but yeah. No, do you have any dad jokes you wanted to share, or does it nothing comes to mind? I'm sorry, I know. I didn't tell you to plan for that at part, so I'm sorry. Again, thank you so much for your time, George. I really appreciate it. And again, anyone listening to this, please feel free to touch base with George. I'll put his website in the description of this episode. And again, thank you so much for your time.
Thanks for having me, Michael. Keep up the good work.
Thanks for joining us on Sharing More Than the Sheets. Please make sure you subscribe to be updated with future episode releases, and feel free to share this episode with any friends or family that you think it might benefit. Please visit us at sharingmorethanthesheets.com.au to submit questions or requests for future podcast topics. These podcasts have been brought to you by Better Financial Planning Australia. To book a 15-minute phone chat, visit betterfinancialplanning.com.au.